The World Trade Organization has slashed its growth forecast, saying there's been an ongoing slump in trade since the fourth quarter of last year.
In a new report, the WTO says it now expects global trade to grow by just 0.8% this year. That's less than half the 1.7% increase it predicted back in April. The WTO has blamed the downturn on persistent inflation in many parts of the world, a strained property market in China, which has hampered post-pandemic recovery, and the impact of the war in Ukraine. The report also says there are signs of fragmentation in the global supply chain, with the total share of intermediate goods, which are the materials and components used to create products, dropping to 48.5% in the first half of this year. That's compared to an average of 51% in previous years. Ralph Ossa is chief economist at the World Trade Organization.
We've cut our growth forecast, the forecast of the growth in the volume of world merchandise trade down from 1.7% to 0.8%, which is well within the error bands of our April forecast. And back then, we already indicated that the risks are firmly on the downside. And some of these risks have materialized now, so we have continued high inflation in advanced economies and the accompanying high interest rates. We have a slower recovery from the COVID pandemic in China, and we also have the repercussions still from the ongoing war in Ukraine.
And one of the things that the WTO has picked up on is the strained property markets in China, as it calls them. How much impact have the problems there had on the outlook?
Well, that's an interesting question. I mean, as I said, the slower recovery in China did play a role, and presumably the property market also contributed to that. Having said this, it's really not China where we see the main drag on the growth of import demand. So if you just look at what has happened so far, at least, China has actually contributed positively to imports, whereas the US and also the EU have contributed negatively to import growth. Of course, this could change, in the future if the property crisis gets more serious in China. But so far, it hasn't been that dramatic.
There has been, though, a reduction in trade between the United States and Asia more broadly. What's the scale and perhaps the significance of that?
Well, what we do look at in the report is we look at trade in parts and accessories, certain goods that feature particularly heavily in global supply chains, just to get a sense of, what has happened to global supply chains. And what we see, indeed, is that the United States is importing a smaller share of these goods from Asia, a smaller share of these goods also from China, but the change is not that dramatic.
And a warning, too, about global economic fragmentation. What could that look like? What problems could it bring up?
Well, so we do see first signs of fragmentation. As I said, it's only, small signs that we see so far, but of course, it's a dangerous road to take, if you will. We have estimated in previous work that if the world was to divide into two geopolitical blocks, this could lead to real income losses of up to 5%. So that could be quite significant for the world in terms of economic costs. But more broadly, we really believe that embracing international trade is important, not just for economic benefits, but if we want to build a more secure, a more inclusive, and also a more sustainable world.
You've cut the growth forecast, but what's the broader outlook? Are there any brighter spots?
Well, so for next year, for 2024, our trade forecast remains roughly unchanged. So we now predict trade growth. So this is the volume of merchandise trade. There should be a specific here of 3.3%. So, in some sense, the future looks better than the present in terms of trade. But really what this is, it's just a reflection of the fact that international trade behaves very cyclically. So now that growth slowed down this year, trade slowed down even further or even faster. And next year, we expect this to normalize.